You're looking at a daily chart of the S&P 500 index, and there are three types of markets. There's downtrending markets, there's uptrending markets, and then there's this, which is just sideways for, the better part of a year, right around the 4,000. Yeah, it goes up, but then it comes below it and goes above it, trades below it, goes above it, trades below it. Now it went up to nearly 4,200 recently during this run from January to February 2nd. And now we've had this pullback right to this area, closed at 4,012. So, this is great for day traders and swing traders, but if you're a position trader or a trend trader, I mean, there is no trend. The trend is sideways. So it's kind of frustrating for trend traders and people just want to buy stocks and hold on to them because they're not going anywhere. But if you're a day trader or a swing trader, just buy the dips, sell the rips, or short the rips, get long on the dip. So, it depends on how you want to play it. But the S&P, which I don't play, that's kind of what it's been doing for a long, long time. It's pretty easy to see there. But I don't traffic in, S&P type of stocks. They're mostly too big for me. I like the smaller ones or the mid-cap ones. Those have a better chance to be 10 baggers. And this is the MDY, the S&P mid-cap exchange traded fund. Had like about a 9% gain from the beginning of the year to February 2nd, and now it's pulled back. This is just a normal pullback. But one thing that kind of bothers me a little bit, what makes me feel a little cautious, is the downtrending 10 EMA here. So yeah, it's in a power trend, but the 10 EMA and the 21 are starting to curl lower. They are curling lower. So just something to be mindful of. The IWM, the Russell 2000, very similar, a little more pronounced on that curl downward. It probably moves a little faster. It had this nice rip. And now the pullback, and you got to expect when you have a 14% gain that you're going to give some back, half of it back, right? I mean, that's normal behavior. There's nothing that's been, abnormal in this pullback. This garden variety pullback, very tame. Today, yeah, we had a little bit of a boost, not a big deal. Mostly due to NVIDIA and the semiconductor stocks and AI, anything AI, it's your gold. I should change my name to Marty AI. Anyway, this is the Nasdaq, same thing. You could see it was like a 14% gain and, went up to 12,269 on February 2nd. Now it's just giving some back, probably about half of that gain. And so, we're heading towards the end of February. So the first 2 months you had, 14 up, 7 down. So you're 7 to the good, 7% that is. So not bad. You can't complain about that. And it's got to be expected. And it's not, the end of the world. It gives some back. It's healthy going forward. Anyway, I do not trade. Oh, by the way, my disclaimer is, this is for my entertainment purposes only. And so I'm amusing myself here with this video, this daily review. It says on YouTube, it's not for kids. So we're all adults here. This is NVIDIA. Nice pop on earnings here today. The earnings weren't that great. If you look at the numbers, you're going, holy smokes. These guys have no growth. But, Jensen mentioned AI a bunch of times in his conference call, and investors ate it up. Obviously, it was up 14% on massive volume. So investors are talking with their wallets. So you got to listen. And that's a nice, healthy move. A bounce off the 21. And I'm going to show you stocks over and over again. This looks like technical trading that they're just bouncing off moving averages today. So good for NVIDIA, good for the longs. I don't own it. If you do, congratulations. If I did, I would be doing something, but I'm not going to tell you because you can do your own DD. This one is Tesla, and it's just having a terrible time at the 200. It just cannot get above it. But, on the other hand, if you're short, you're thinking you can't push it down, and any negative news, it won't go down. Any positive news, it won't go up. It's just a magnet to 200. This has got to be frustrating, both shorts and longs. But anyway, it had a nice run since its lows and the end of December. And since January, it's had a nice bounce, it's been a two-bagger, which is pretty nice in a month for a stock this big. So congrats to the Tesla longs. I don't know how much more you can expect out of that under the 200 there. Anyway, I'm going to move on. I'm going to go to the oil stocks because the oil stocks, I keep saying it's a stock picker's market. And if you're in oil stocks last year, you could just pick any stock and you'd be gold. But this year, you know, these stocks are not doing well. Devon, somebody mentioned Oxy to me today. Will Uncle Warren be buying? I don't know. He's on a different agenda than the rest of us, but I would not, or I should say I would not. I am not interested in stuff like this. This looks like, you know, just kind of a stage 4. You can see the long 2.5-year run, and now it went into a stage 3. And so here's your advanced stage, and then there's your stage 3, and now I believe it's in a stage 4 decline. People do not like it when I say that, but too bad. That's what I believe. Anyway, the pipeline stocks are ripping. This is LNG Cheniere. They reported earnings today. Obviously, a nice response to the earnings here, above all moving averages. We'll see how this one plays out in the coming days. But, you know, anytime it's up, you know, nearly 10% with that type of volume, that is not to be ignored. Anyway, TRMD, this was on our watch list at MC Stock Charts. It's been on the watch list for a few days, and you can see why with this pattern here. But it just bounced off its 10 EMA. It came down to its 10 and then bounced today. A nice 9% bounce with a strong volume. So Weatherford is another one at MC Stock Charts we have. And this is nice. This is an earnings move, ripped up nicely on earnings. And this is a pullback that I'm talking about. That, you know, you got to embrace these pullbacks. Not the end of the world when your stock goes lower. It just came down to the 21 and then popped today, nearly 4%. So, you know, if you didn't get in here, this is giving you another chance, you know, to trade it or get in long or whatever you're going to do. But, you know, I see people crying about their stock going down. Well, your stock's not going to go up every day. You know, grow up. It's its stock. It doesn't know you own it, you know. So just pay attention, be patient, be vigilant, do your homework. This is TNK. This one traded down to its 10 EMA, down to its 10 EMA, and popped today. A nice 13% pop with volume, and that's not to be ignored either. And so these pullbacks to moving averages are being rewarded. So that's a theme. Pay attention to those. And it's not just these oil and gas stocks, as I'm showing you. There's another pipeline stock that traded down to its 10 EMA and then popped, you know, nearly 4% today. So definitely those pipeline stocks doing well, and the exploration stocks and the refiners probably not so much. How's Chevron? Yeah, below the 200. So that's adios muchachos for me. Anyway, let's take a look at the semiconductors. I mentioned NVDA. It, you know, just Jensen mentioned AI in his conference call so many times that it just was mind-boggling here. This is ACLS, you know, another you know, semiconductor stock. You can see that this one has just been on fire, and you know, this pulled back to the 10 and then popped, you know. So you got to embrace these pullbacks, you know, watch for them if you're interested in that kind of thing. I kind of am, but you might not be. These are extended. I mean, they've broken out of bases, not a base. It's just a pullback to the 10 and then trading higher. That's ALGM, Allegro Microsystems. That one has been on fire. LSCC, I may or may not have bought this stock today. You could see the big move breakout, and then it pulled back, you know, 3 or 4 days. Oh my gosh, end of the world, my stock's going down. Well, it just traded down to the 21 and bounced 3% today. That's a nice move in LSCC. Oh, and I just put this one up here. It interests me. I don't own it. It's on the watch list for obvious reasons. This one broke out after earnings. It had a pretty good response, and then pulled back to its you know, pivot area, and it had a secondary offering of like 1.1 billion and note there to pay off some debt. But anyway, it closed right around the 21, and I wanted to just point out, I'm going to go back to ACLS because this did the same thing. You can see the base on base pattern, very, you know, it's just, this type of action is going to wear a guy like me out. I cannot stand this stuff. But I did buy it here, traded up to 88, from 80 to 88, took a 10% gain, and then it pulled back to the buy area. And it's like, oops, came down to the 21, and obviously coincided with the beginning of the year rip. And this is definitely a leader that is gone, is emerged. But if you go take a look at ON, you can see some similarities. with the base on base pattern, the breakout, now pull back to that pivot area. Will it do the same thing as ACLS? I don't know. Probably not, but it's just interesting to look at these chart patterns. And even though it's a semiconductor stock, it did not trade with the move today in the SMH because I believe in that secondary offering. This is STM. I love the weekly chart on this. Nice symmetrical, nice run up the right side power with lots of accumulation. Now it's coming down in lighter volume here. And it's going to take some time. That's a weekly chart. And on the daily, it looks like, oh my gosh, when's this thing going to get going? But it did trade down to the 21 and then popped a little bit today, like, a lot of stocks. I want to go to the medical stocks and the drugs. Can't go a day without meds and drugs. TMDX. This one popped on earnings today. It's just got tremendous growth. What can you say? I mean, when a stock makes new highs when this kind of volume, 20%, you just cannot ignore that type of a move. And it closed near the highs of the day. 93% of the daily range. So that one looked good. LNTH, another medical product stock. These guys have been delivering the goods. You could see it had a big move in 2022. And now it's just kind of taking a breather. It traded below its 200 for a long time, but with today's move, 20% gain, 360% above average daily volume, that cannot be ignored, Dan. So definitely should be on your watch list or PEG list or whatever kind of list that you make. OSUR is another one in this group, medical product stock. Yeah, it's a low price stock, kind of thinly traded, but it's making it broke out of a base and now it's trading higher with volume. So, that's kind of a nice move there, percentage wise, Anyway, in another drug stock, I always got to go to the drug stocks, right? And this is NVDA, one of my faves in the group. These the Wegovy and Ozempic, their drugs are just really strong, great management team, and trading above the 10. So I just had to throw in a drug stock today. Okay, let's go to the retail stocks. ULTA Beauty. This thing is a beauty, just making new highs. I mean, there's not much you can say about this thing since the low at 373 here. It's just been straight up, just on a tear, and made a new high today. I mean, what's not to like there? I mean, lower left to upper right. That's what we want as trend traders or position traders. Okay, you can sit in that thing and hold it and watch your money grow over time. That's what you want with your stocks. You don't have to sit there and stare at the screen every day and day trade. This is ELF. I listened to the Dillard's, or I just read the Dillard's release, and they said that cosmetics was their top category. And ELF, I don't even know if ELF is sold at Dillard's, but ELF is definitely selling all over the place. Very popular, and just traded down to its 10 EMA. And then popped a little bit today. So yeah, it comes back a couple of days, find support. I mean, that's really nice trading. CROX, cannot go a day without talking about CROX. The CEO was on Jim Cramer last night, and I expected this thing to tank today because of the inverse Cramer people. They just tank these stocks, or he has that effect on stocks. But anyway, you can see that CROX traded down to its 50, then ripped after earnings, and just pulled back, and now is kind of hovering around its 10 EMA. And I just showed you the weekly. As long as this 10-week line is going up and it just trades along that 10-week line, and it's down 4.5% this week, big deal. As long as that line keeps going higher, you can see week after week, just look at that red, 110.78, 111.91, 115.58, 116.83. So if that line keeps going up and you own it and it keeps going up, it's going to keep going higher. I mean, and it should. They're going to deliver more than $11 in earnings, So anyway, let's get away from CROX. SMCI, I want to talk about this one today. A couple buddies of mine were talking about, down 3 days in a row. They're getting a little nervous, but all it did was just come down to its 21, and it found support, and it ripped, nearly 9% today. That's just basic trading right there. I mean, that looks like technical action to me. Comes down in a lighter volume, then pops. And if you look at the weekly chart, I mean, you don't even have to know anything. Just look at these last 5 or 6 weeks of volume bars. I mean, there's institutions buying this thing and off the low, so really not much to do with SMCI, but that's definitely the theme for today, just a bounce off moving averages. And I saw that a lot with stocks. First Solar, the solar stocks have not been doing that well. It traded down to the 50, had a weak little bounce today, but I'm going to watch this one in the next coming days and weeks because I kind of like the pattern. It's not really a base, but it did pull back to its 50 on light volume. I want to see this thing bounce higher. It's got earnings next week, so maybe that'll be a catalyst. PLNT, I put this one in here because it traded below its 50 and then it had earnings and ripped higher the last couple of days with heavy volume. So Planet Fitness, people are going back to the gyms, working out, looking good, getting buffed, staying healthy. That's all good. And they're, it's a good place to meet people too, if you're into that. Anyway, Arista Networks, this one was on our watch list at 135 and it kind of broke out, and then it came back. And like I said, when these things pull back, you got to watch for that because it pulled back to the 21 and now it's bouncing again. So this could be back on our watch list once again. Embrace the pullbacks as long as, the indexes aren't crashing and then they're not, then, these pullbacks are being bought. That's a good sign. This is Shift for Payments. Square reported tonight, and a pretty good report. These guys, I guess, report next week, according to MarketSmith. But this thing sold off with the TOST earnings. And we saw the restaurant and bars were just killing it. And I think this is taking market share. It sold below its 50, but I'm looking for this thing to rip back through and rally and actually make new highs after earnings in March. So we'll see what happens. Anyway, that's it for today. Thanks for watching. We never give up.